Hello, I'm Diana Cáceres, Tax Research Manager at Thomson Reuters. Welcome to our next series at Thomson Reuters MENA. In our hot seat, we have Thomas from Aurifier. Welcome, Thomas, and could you introduce yourself, please?
Yes, thank you, Diana. Good morning, everyone. So my name is Thomas Vanhey. I run a tax consultancy boutique established in Dubai, serving the GCC region, focusing exclusively on taxation. Thank you very much for having me again.
Thank you very much for coming. So today we are going to talk about international taxation and the global trends. Of course, this is a very important topic, as most of the companies are looking at international rules as their main focus on prevent double taxation and at the same time to avoid tax evasion. Mm-hmm. So what is your view on the global trends in taxation?
I think that the current global trends have been going on for some time. We see a trend towards automation and digitalization. If you look at, for example, where we're coming from, Switzerland recently abolished the paper VAT returns. It was still possible to file paper VAT returns. So that's where we came from, and where we're going is a purely online declaration and portal. But beyond that, I think what we see from a VAT point of view in terms of the evolution is much more exchange of transactional data with the tax authorities and pre-filled out VAT returns, given that the tax authority in a number of countries already have transactional data available to them on a much quicker basis, on a transactional basis, rather than a return filed after a certain tax period.
Of course, in the UAE we don't have this type of automation. However, is there any cross-checking the federal tax authorities is doing during audit process? Mm-hmm. How does it work?
So there's no doubt that we will get to that point in a number of years. The system implemented in the GCC is a bit old-fashioned in that sense, but we will get there. In terms of the cross-checking, there's a great number of information available to the federal tax authorities in the UAE, and during audits they do cross-check financial statements with the VAT return to see whether everything has been reported or not. It doesn't happen on an automatic basis, but it is definitely one of the instruments for the tax authorities to reconcile the VAT returns with the financial statements.
Is there any cross-checking with third parties?
So again, it's something which is available to the federal tax authorities on an automated basis, except for the information exchange with the customs authorities. It does not happen. Neither does it in any of the other GCC countries, except for perhaps Saudi, where there is a cross-checking with the payments made from Saudi to abroad with the withholding tax returns filed in Saudi.
That's very interesting. So on corporate tax, what do you see the trends and the tendencies for the next 10 years, for example?
You see a really strong evolution towards a lower corporate tax rate in the industrialized countries. We've seen the last few years in the big industrialized countries a lot of reforms and a reduction in the nominal corporate tax rate. You saw it in the US, but also in France and in Germany. That's going to continue. But corporate tax is going to play a much smaller role in the future than consumption tax, on the account of consumption taxes like VAT being much easier to administer, and I would say purely from a tax authority point of view, though, they are a bit more heavy to administer on a taxable person side, on the business side. But given that we have in parallel that trend towards digitalization and doing everything online, that administrative burden should reduce also going forward.
Would you like to talk more about Pillar 1 and Pillar 2 on corporate tax?
Yes. Pillar 1 and Pillar 2 are a bit, I would say, vague terms which are not very familiar with for a lot of people. But they are they're going to be the biggest overhaul in international taxation for the coming decade. Pillar 1 basically is a proposal to have a kind of a hybrid between VAT, corporate tax, and transfer pricing. And it is specifically targeted towards companies that offer digital services and today are perhaps not being subject to any corporate tax in the countries where their consumers are. Funnily enough, Saudi has always had a very aggressive standpoint in any service rendered to a beneficiary in Saudi. They would try to capture that under corporate tax, and this Pillar 1 actually supports their position, which has always been challenged by a lot of people before. What it comes down to is the Googles and the Facebooks and the Amazons of this world. They develop their products, but they have a lot of consumers in UAE, Saudi, and so on without necessarily being established there. And so the proposal is that you mix place of supply rules for digital services with corporate tax. So in other words, even if you are completely not established in a country, but you have consumers in that country, you would be subject to corporate tax in that country, depending on how large an amount of consumers you have in that country.
So basically, this is a mixture between corporate tax and VAT, where the place of supply rules for VAT will be applicable for corporate tax as well. So that is the trend, and this is where we are going to.
Definitely, yes, yes. There's going to be, France has proposed a digital sales tax. That was a bit to provoke a whole discussion, so the discussions are currently ongoing. So that's Pillar 1.
Yes.
Pillar 2 is a substantial improvement to the current international tax rules. So we will still have double tax treaties, but what you see in the last few years is those double tax treaties, to a certain extent there was an override by the multilateral instrument already impacting it. We've got Pillar 1 impacting it, and Pillar 2 now as well. So from an international tax point of view, it's exciting times, but it's also very complex times.
It will take time to adopt all these rules and put in place for most of the countries, right?
Yes, it will.
So, just move on to global trade. What are the current challenges in the global trade space?
I think the current challenges have a lot to do with the US-China trade war at this point. It impacts a lot of supply chains, so what you see is there's still a great deal of uncertainty. There's no final deal. So you see, for example, supply chains of Chinese manufacturers shifting, for example, to Mexico to then make use of the USMCA free trade agreement, but they could equally move their supply chains to the GCC or to Europe as well. Everything evolves around, what is the origin of these goods. They could have a Chinese manufacturer, but having a substantial transformation or production manufacturing in another country could basically change that origin, and then you wouldn't get penalized anymore under the US-China trade war. I think the other evolution is where we saw, let's say 10 to 15 years back, more of a harmonization and less tariffs, less barriers, and so on. We see today a movement, unfortunately, a bit in the opposite direction. When you translate that into the GCC, for example, the GCC has been applying anti-dumping duties to Chinese steel or to Korean car batteries. Mm-hmm. That's something that 5 years ago, the GCC didn't even have the legal instruments to do. So you see that there's much more protectionism in a lot of countries, as opposed to before in the more globalized trend. Let's say 15 years ago, there was a much more reduction of these trade barriers.
What is your view in the UAE on all this AEO certification process? This is in place already, or how is the current status on that topic?
So it is in place in the GCC. So Saudi has a program for it, Bahrain as well. Saudi and Bahrain have a mutual recognition program for it as well. I think the idea is great because when you are AEO certified, you get much more facilities. Your guarantees are reduced. Your goods are cleared faster. But I would say that is going to be caught up by this pre-clearance tendency that we're going to see in the future. But it's definitely a very good idea, and it's going to gain in importance in the next few years in the GCC.
Of course, we cannot let you go without asking you what is the impact of Brexit on global trade.
It's a very good question, and I don't think currently we have all of the answers to that. I think the current answer that we can give for sure is that trade between the UK and the EU currently for this year will not be affected. However, there's a great deal of matters that need to be looked into looking forward to 1st of January 2021. Depending on the type of Brexit that we will get, first of all. But the second thing is already to go and have a look at the transactions that you have with the UK and try to map those with the use of technology and whatnot, and try to prepare for those changes. I think that the massive impact on international trade relations with the UK is going to be that UK Customs has said that they will not provide any simplifications whatsoever before 2025. So that means that during 4 years it's going to be much harder to import and export to and from the UK. And I think the important element as well is that the UK will be downgraded to WTO status, which means that it's as if you're trading with any third country. That means that tariffs might go up. That may be certain measures taken as well in terms of quantities or other types of trade barriers, and that the UK is going to have to negotiate its own free trade agreements as well, and those free trade agreements, they take a lot of time to negotiate, as we've seen recently with the South American bloc. It took 20 years for the EU and the Mercosur to negotiate a free trade agreement, so that's going to take a long time, and in the interim, trade is going to get more difficult and more expensive with the UK, unfortunately. In the withdrawal agreement between the EU and the UK, though, there's a certain number of facilities provided to make trade between the UK and the EU easier. Nonetheless, any goods which will be produced as from 1st of January 2021 in the UK, they will not have European origin, and I think that's a big impact on trade relations.
Well, thank you very much, Thomas, for being with us. I really enjoyed these updates on global trade and international taxation. Very interesting. Hope to see you soon again in that hot seat. Thank you very much for watching us, and this is all for today.